Guys, behind me is the New York Stock Exchange, which everybody knows, right? But do you know that right around the corner over here is where the 1869 gold panic happened? So I'm going to talk about that story. Let's go take a walk over to where it happened. So the famous 1869 gold panic is when Jim Fisk and Jay Gould tried to corner the gold market in the U.S. and they did that with the unwitting help of President Ulysses S. Grant by influencing his brother-in-law. So the original gold room used to be where this building now is. It was a different building back then, but the address was 14-16 New Street. So there was a whole lot of financial scamming and finagling and bribery and corruption back then to enable this kind of thing, and Jim Fisk and Jay Gould were pretty good at it already. So Jay Gould and Jim Fisk got their start manipulating the Erie Railroad line. Jay Gould was a director there, and along with Daniel Drew, who was a treasurer, they were using it as their own private piggy bank. So when Cornelius Vanderbilt wanted to buy up the Erie Railroad for a strategic line to the west, they needed to thwart his plans so that they could keep using Erie like their own personal piggy bank. So Jay Gould became a director in Erie, and later Jim Fisk was also a director at the same time. And what they did was they got the treasurer, Daniel Drew, and them a scheme to print up a whole bunch of stock certificates as Cornelius Vanderbilt was buying up the stock to try to gain control of the company. So the more he bought, the more they printed and made his stake diluted more and more. So Vanderbilt eventually figured this out, and through his connections and bribes in Albany was able to put out an arrest warrant for fraud for Fisk and Gould, which they fled to New Jersey, which was out of the jurisdiction of New York authorities. So what did they do? Well, they went and bribed the politicians even more than Vanderbilt did, and bribed the people in Tammany Hall who were running the city at the time, like Boss Tweed and all of those guys. And so they eventually got the arrest warrant squashed and made a deal with Vanderbilt, even though Vanderbilt ended up losing about $7 million at the time of the worthless stock that he was buying. So now with their political connections and that nothing happened to them for this fraud that they pulled off, Jim Fisk, which was the more flamboyant one and the show-off, while Jay Gould was like the mastermind type quiet person, Jim Fisk came up with the idea of a gold corner of the gold market. And Jay Gould was not really on board, but Fisk went ahead anyway. And his thinking was that he was going to buy up as much gold as he can, to the tune of about 3 times more than the gold in circulation. And obviously he was doing this with paper contracts trading in the gold room over here. So to give you an idea of what was going on in the US, we were just newly out of the Civil War that ended in 1865. During the war, the government created the paper greenback currency, and it traded right next to and along with actual gold coins. Well, what do you think happened to the value of the gold coins versus the actual paper greenbacks? The greenbacks were worth less than the gold coins, and that was the market. There was a premium on the gold versus the paper. And so at the time, with about $140 worth of paper greenbacks, you could buy $100 of gold coins. So think of it like the $20 gold American Double Eagle. That has almost 1 ounce of gold in it. It's about 96% or so. So let's just call it an ounce. With $140, you can buy 5 of those $20 gold Eagles. Now some rough numbers. It is estimated there was about $20 million worth of gold coins in circulation at the time, and that the US Treasury had about $100 million in gold that they could release in case they needed to drive the price of gold down, in case it got too expensive versus the paper dollar, which is a little like what they do with interest rates to drive the interest rate up or down depending on where they want it. So there's 20 million in gold in circulation. The US has 100 million, and Jim Fisk buys up to about $60 million in gold contracts. Now, when he's buying, somebody is selling them to him, and as the price goes higher and higher, they get squeezed because they have to buy it back at a higher price or go bankrupt. So how were they able to pull off this scheme and manipulate Ulysses S. Grant? Well, they knew a man named Abel Corbin who already had some scandals behind him, so was very corruptible. So they cut him in by giving him a position in some of this gold, I think maybe $25,000 worth or something like that. And he just happened to marry the sister of Ulysses S. Grant. So he was the brother-in-law to Ulysses S. Grant. Now about Ulysses, he was known as being a very good general, but anything outside of that, he was pretty naive and clueless, they said. And matter of fact, in West Point, they actually had a nickname for him, Useless, instead of Ulysses. So the brother-in-law put the idea in Grant's head that a higher gold price is good for the country because it helps the farmers who export their goods to Europe export more with a higher gold price and a lower dollar. Now, I don't know that Grant really bought this idea or even understood it completely, so he kind of just was hands off for a while until it got to the point where the gold started climbing, and it climaxed in 1869. But before that, Jim Fisk was going around and giving Grant personal rides up to Boston and having dinners with him and making sure the press saw that he was kind of in the ear of Grant to let people understand that Grant was in his pocket even though he really wasn't. And so that might stop some people from trying to put an end to his gold manipulation if they think that Grant is actually on his side. So Jim Fisk was buying up a whole bunch of these gold contracts with checks that were not going to clear from banks that Jay Gould had an interest in, so he could write these checks without having the money in there for a long time. And at the same time, as he was buying these gold contracts with money he didn't have, he was loaning them out to the short sellers for more money so he could buy more contracts. So one big circular Ponzi scheme. Now, Jay Gould wasn't really convinced of this gold corner until much later on in the game, but he did start buying up a whole bunch of gold. And on the day that it peaked, September 24th, 1869, was pandemonium in the gold room because Jim Fisk and Jay Gould were using all kinds of brokers to hide their intention of their buying and selling in the gold room so that they don't tip their hand to other people of what they are doing. So Jim Fisk's brokers were in the room bidding up the price of gold, while Jay Gould's brokers were in the room secretly selling as much as he can because he thinks it has peaked. And at the same time, Ulysses S. Grant and his Treasury Secretary are figuring out what's going on, that they've been manipulated through his brother-in-law and his sister, although he doesn't believe his sister was involved. And so the Treasury of the US government actually unleashed $4 million of gold coins that day, or made the announcement, and that was all it took to break the back of the gold corner. So all told, the run-up in the gold price was something like $130 to about $160 before they released the $4 million of gold to crash the gold market back down. So the result of this gold panic and crash was a whole bunch of suicides and bankruptcies of brokerages. So there was so much pandemonium with the trading that day, and so many brokers going out of business and not recognizing trades or trying to back away from trades that they made, that there was a whole investigation into this. The government got involved, and of course, since Jim Fisk and Jay Gould had connections in Tammany Hall, they used the mayor, A. Oakley Hall, to install his people in there to actually count the trades that day. So what do you think happens when you put your own people in there to count the trades? Like Stalin said,
those who vote count for nothing. Those who count votes decide everything.
So what do you think happened? Well, Jay Gould came out with millions because he was selling early in the day, and so he sold most of his stuff and probably had those other tickets where he was buying either canceled or lost in the shuffle or something along those lines. Jim Fisk didn't come out as good. He did take a hit, but not as bad as he could have. So although Jim Gould got away with millions and Jim Fisk got away a lot better than he should have, Jim Fisk's luck would run out 3 years later. In 1872, Jim Fisk was gunned down by Edward Stokes in a love triangle between Jim Fisk's mistress, who was alleged to be a lady of the night, while Jim Fisk's wife lived up in Massachusetts. Edward Stokes was Josie Mansfield's other boyfriend, I guess, and things came to an end in Manhattan for Jim Fisk in 1872. So what's the takeaways here? Well, number one, corruption has been going on for a long time and continues to go on, and if you have enough money and influence, you could change the rules of the game. This happened to the Hunt brothers when they tried to corner the silver market. The futures exchange changed the delivery rules from physical delivery to cash delivery, which blew up their whole corner. It happened again in the great financial crisis when banks were making all kinds of really bad mortgage loans that they knew were garbage, and when they blew up, the government bought them back for their full price at the expense of our taxpayer dollars, of course. And in a move very similar to the gold crash, where they picked and choose which buy and sell tickets were going to be valid after the crash, in the 2010 flash crash, when the S&P 500 fell 1,000 points in 9 minutes and some stocks went down to a penny, like Accenture and 3M and a lot of ETFs, because of hedge funds and high-frequency trading algorithms that were programmed to sell on the way down and remove liquidity, and so there were just very little buyers, and they kept selling to the point where they sold at levels of pennies that were previously, a few minutes ago, $20, $30, $40 share stocks or ETFs. So what did the exchange do? They broke a bunch of the trades that they say anything more than, I think, 60% away from where the market was before the crash happened, they would cancel those trades. Now, who did that benefit? Obviously, the big guys with the high-frequency trading algorithms that would be taking a big loss if that didn't happen. Who was affected? The little guys who, if you stepped in and bought 3M at 50 cents a share, let's say, and then it recovered back to wherever it went to, and you sold it at $15 a share, and you thought you were a genius, and you got a notice the next day from the exchange that, oh yeah, you still sold 3M at $15 a share, but that 50 cents purchase you made never happened. So now you're short 3M from $15 a share, and now maybe 3M is $35, $40 a share, and you're down a whole bunch of money. See how that works? So the other takeaway is to see the value of paper money over the years. Even back then, before the Federal Reserve was created in 1913, they were still printing money like crazy, to the point where it was 40% undervalued compared to equivalent face value of gold in dollars. So back then, to buy 5 $20 gold double eagles, $100 face value, it would cost you $140 in paper greenback currency around there at the time. Now, each one of those $20 gold coins has almost an ounce of gold in it, so all 5 of them is about 4.8 ounces of gold. And at gold's price, say around $3,400 an ounce today, that brings those 5 coins of $100 face value today to be worth about $16,500. So what would you rather have? $140 paper money in 1869 brought forward to today, or 5 $20 gold pieces brought forward to today? If you do the math, that means that $140 in paper dollars back then has now lost 99.4% of its value since 1869. And that's the good news. The bad news is there's still 0.6% to go before it is completely worthless. So guys, I hope you liked this video. I'll see you in the next one. Thanks for watching.